Good morning, ladies and gentlemen, and welcome to the SHANTA Gold Limited investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all of the questions submitted today and publish responses where it is appropriate to do so. These will be available via your Investor Meet company dashboard, and we will notify you by email once these are ready for your review. Before we begin, I would like to submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. And I'd now like to hand you over to CEO Eric Zurin. Good morning, sir.
Good morning, and thanks for having me back on the platform. It's great to be here. Today we announced our Q2 2022 production results, and I'd like to take our investors through a presentation, which is up on our website. The background is that the Q2 has been very steady. Shanta's had a good, strong quarter from the teams on the ground in Tanzania and West Kenya. At New Luika, our production has been delivering better than expected. At Singida, we're making great progress on construction, which is due for first production in Q1 next year. So literally just over 6 months away. And at West Kenya, we're actively drilling with 3 rigs. We're investing in growth across the company. We're a completely different company than what we were 5 years ago when I took over this role. And it's very exciting because of the growth we have and the value in our portfolio. So with that, I'm going to turn my camera off. I'll take you through the slides on the presentation, and then we'll open up to some Q&A. Just as you recall, you may have seen this slide many times, but I'll take you through it again. We have a diversified portfolio of assets in East Africa. We value them at roughly about $500 million of net present value. So that's the most conventional way to value commodity projects. This is a discount of future cash flows. We've been operating in Tanzania for the last 20 years. And in fact, 10 years ago on this month, July, New Luika, our only producing asset at the moment, poured its first doré gold bar. So we've now reached a 10-year milestone, and I believe we are in much better position than we were 10 years ago. And that's thanks to the portfolio of assets we have and the experience that we've gained. Now, over the last few years, Shanta's undergone a transformation. 2022 marks the year that we've basically finished the job. We're going to get our second asset in production, and we're going to get over 100,000 ounces of gold produced for the first time in our history. We have an attractive dividend yield of 2.4%. Our balance sheet is in great shape. As we sit today, we have probably just over $30 million of cash, and the company is in very good health to deliver on the growth. Now on to the next page, which is a little bit about our outlook. We've presented this slide in the past, but the key message here is to reiterate, over the next 4 years, you can expect to see north of 400,000 ounces of gold production. It's as simple as that. Singida comes online and we become a 110,000 ounce plus gold producer per year. That happens in 6 months. Beyond that, we have the highly compelling West Kenya project. This is kind of longer term, medium term, longer term growth. We're now drilling across 5 deposits across 2 mining camps. And these are really, really special grades. 12 grams per ton is our current indicated resource. You just don't find that anywhere readily in the world. So production is set to grow rapidly, and our assets are delivering. On to slide 5 and a little bit about what we did over the last 3 months. During the quarter, we produced 17,527 ounces at a gold blended grade of 2.83 grams per ton. As we already guided in January, we said production would increase throughout the year, with the second half representing about 65% of total production. And so today we reiterate our guidance of 68 to 76,000 ounces. Pleasingly, the mining from the Crown Pillar, which we commenced about a month early, in April has delivered safely, and that's de-risked the overall production plan for 2022. Now, as we've always said, 2022 is the growth year. 2023, we will go back into cash harvesting. And so what I can say is that during the quarter, we invested $10.9 million into capital, which is largely construction of SINGIDA, West Kenya drilling, and then some at New Luika. And this follows on from about $9.4 million in Q1. So to put it another way, we've invested $20 million year to date into our growth, and yet our liquidity actually improved. We went from, I think it was $13 million to $14.5 million of liquidity at the end of Q2. And then on top of that, we've just drawn $20 million of standard bank financing. So I said it before, and I'll say it again, we will not be raising equity. There is no risk of that. We have more than enough cash as we sit today to complete the SINGIDA construction, and that would assume we would have no more benefit from New Luika. So things are in great shape on the balance sheet. We have lots of capacity in terms of our liquidity, and we have cash flow from our operations, which will be very strong over the next 6 months. Now on to a little bit about the results from the second quarter, I should say, on slide 6. Physicals, which are the volumes that we've mined from both underground and open pit, set a new record during the quarter. We mined just shy of 225,000 tons, which is something that Shanta has never done before. So what's the message I'm trying to say? The operations, the physicals, the equipment, the people are delivering better than they've ever done before. Now onto the grade. During the quarter, we processed gold through the plant at 2.83 grams per ton. That was obviously benefiting from the Crown Pillar. And after the Crown Pillar ceases and towards the start of next year, we will be mining from the New Luika underground deposit, which is an area we have basically not touched much at all. So that is the future. So that's highlighted here. And then I would say the last point, or the second last point, is the gold price. Now we during the quarter we sold at 1866 per ounce. That's the best ever Shanta has done, and certainly we reaped those benefits. Now finally, on the tons ore milled, that was another great achievement during the quarter. The processing plant is delivering as expected. The third mill is doing what we said it would do, and we're on a run rate of about 875,000 tons per year. On to slide 7 and a little bit more on SINGIDA. Just to reiterate, mine construction is on track for Q1 23 production. I think it's largely around March is the current plan, but that can always change by a couple of weeks. It could be in February, and so that's the number. That's the date to look for. Construction 63% complete. It's the construction, really, to think about it, is broken into 2 parts. One is the hard equipment, the infrastructure. The second is the actual physical, so the mining of the waste and ore. And so I would say on the first part, the equipment and the infrastructure, that is progressing very well. We've had the crusher and grinding circuit now installed. The mill is next in August, and then we'll have the elution plant towards the end of the year. So that equipment's coming from Australia, currently in manufacturing. Now the second part of the construction plan is mining, and that's getting in the big trucks to remove waste and start mining ore, and to build the tailings storage facility. And so that process will really start off in earnest shortly. Probably, I think it's later this quarter, and then we'll ramp up with more equipment on site as we lead into first production in Q1. Mining continues on site now. So we're mining from the pits as we strip them for waste material to build the TSF. The stockpile of gold now sits at 6,600 ounces, grading 2.1 grams. We think that'll get to around 10,000 ounces of stockpiled gold in ore before production starts. And the current stockpile is about double what it was at the end of March. On to slide 8, a little bit about West Kenya. The highlights here, we have 3 rigs actively drilling across our sites. We're planning 65 to 75,000 meters to drill this year. And we're drilling across Isulu, Bushingala, Rumula, and Kimingini, a new target. What are we doing with West Kenya? If you take a step back, what's the strategy here? It's twofold. One is to expand the resource. The other is to infill and upgrade the resource. And so last year we did both. We expanded the resource to 1.6 million ounces, and we upgraded to 378,000 ounces of indicated at 11.7 grams per ton, which is an excellent grade and really sets the bar high for anyone trying to compete. So West Kenya is progressing. It's I would characterize West Kenya as a medium-term growth project, which delivers exponential value potential for us. On to slide 9 on the catalyst, and then we'll open up any Q&A. As you can see here, over the next couple of months, the catalysts really are around growth. We are in growth mode. We've raised growth capital. We're funding growth through our cash flows at New Luika, and we will be reporting on the growth results over the next couple of months. The first one being West Kenya drilling results. So I've just preparing that RNS now. The second is really around SINGIDA construction, to keep you updated on how we're progressing there. We've often tweet or post photos of what we're doing at SINGIDA. You can see them on our SHANTA Twitter feed. And they say a picture's worth 1,000 words. So sometimes we use pictures to communicate. And then finally, more drilling at West Kenya, different targets this time, Kimingini and Rumula. So this will be a new area we haven't talked so much about, but are making progress. And then we're restarting the drilling rigs at New Luika on August 1st, targeting reserve replacement. So that's a little bit of what to look forward to over the next couple of months, and we'll keep you updated on how we progress. With that, Jake, I'll hand over back to you to...
Eric, that's great, and thank you very much indeed for your presentation this morning. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated in the top right-hand corner of your screen. But just while Eric takes a few moments to review those questions that were submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Eric, as you can see, we've had a number of questions come in throughout today's presentation, and thank you to all the investors for submitting their questions. If I could please just hand back to you to run through that Q&A tab, and where appropriate to do so, if you could please just read out the questions and give your response, and then I'll pick up from you at the end. Thank you.
Great, thanks. Peter D's asked about all-in sustaining costs. The range we gave in January was 1050 to 1250 an ounce, and asking if that's still intact despite the big rise in energy costs. What we've said in the RNS is inflation's added about $70 an ounce to our costs. That's largely energy and consumables, things we cannot control. We're price takers on those. And what we've also said is that the second half of the year will be disproportionately more production than the first. And so as you see more ounces produced, usually driven by grade in our case, because our plant is at capacity, the unit cost will decrease. So now the unit cost for Q2 was 1303. We believe we'll be producing more ounces per quarter going forward. And so by default, the unit costs should decrease. Now, to answer the question, do we still believe in this range despite the inflation? The short answer is yes. The $70 increase per ounce of inflation related to inflation is still within the range that we've given, and absent there being unexpected inflation, that is still our range for costs this year. James has asked, what grades do we expect from New Luika deposit when you move into 2023? We expect to be mining our reserve overall, which is what we'll do. The reserve grade is about 3 grams per ton. From underground at New Luika, the grades there are about 3.25. And then from the open pits at Elizabeth Hill, the grades there are about 2.1 grams per ton for 2023. Obviously, plans can change. We could start mining from different areas, but that's the current plan. And that will get to the forecasted production that we've announced in our 5-year plan back in last summer. David's asked, given the current inflation, how is that affecting your all-in sustaining cost? It's, as we said in the RNS, it's added about $70 an ounce to the costs. So the way to think of that is for the first half of the year, we produced 28,000 ounces at an extra $70 an ounce. And there's your number, call it roughly $2 million of additional cost. Now, no one's asked, what about the gold price? Typically, the gold price is correlated with things like the oil price. I think we're in a very strong US dollar environment, which is obviously a headwind for gold. Who would have thought that 3 months ago when the gold price was $2,000 an ounce? So all I can say is the gold price can go up as well as where it is today. Peter Dees then asked, does the Q1 go live date for Singida include all commissioning activities? Yes. When we talk about production, that's really about in March, we expect to move into pouring gold bars on a regular basis from the plant. Ramon's asked, very pleased with the results, amazing safety records, which are often overlooked. My question's on VAT. What time frame can we expect for the resolution? I hope we're not being excessively penalized by going down this route. Now, I must clarify, VAT is normalized in Tanzania. We are receiving VAT refunds. We have been doing so for 2 years. This is normalized. So the VAT that we've paid since July 2020 has been refunded. The latest VAT that we've had back or that we've had audited is for the period up to February 2022. So we received the audit verification notes. That's done. That's coming back. So VAT is normal. The question really is what happens to that VAT from 2017 to 2020, which is stuck? And we're working day and night to get that back. We've had very senior meetings over the last couple of weeks and months. This is an ongoing discussion. This is a lot of money for us, but it's a lot of money for the Tanzanian mining industry because there are 2 other very large miners who have the same problem. They're trying to get their VAT back. So we're working on it. I don't have a time frame, but we're working on it, and it's something that takes a lot of engagement to progress. And I hope to provide an update when ready. Now, with the gold price, Kevin's asked under 1,700, reduce margins, reduce cash flow from production, will still service debt, operations, and capex. Well, the good news is we only took the debt out 5 days ago, and we have a 12-month grace period, by which point, when we have to make our first repayment, we'll be producing at a run rate of 110,000 ounces of gold production per year. So the short answer is yes, our all-in sustaining costs at New Luika are, as we announced, $1,303 this quarter, should go lower next quarter. All-in sustaining costs at Singida, I think in the mine plan are under $1,000 an ounce. So if you do the spot minus cost, you generate healthy margins, and that gives you cash to service your growth and to repay your debt. What is your current thought re the share price? Michael F has asked. I'm amazed at how much value there is in Shanta and how it compares to the current market cap. So to put these in context, this is a really important question, I think. $500 million of value. So we value our assets at $1,700 an ounce long term. That's the value of the net present value of the future cash flows. Our market cap today is 109 million. We have net cash, so it's $100 million of enterprise value. So we're basically trading at 0.2 times our net present value, which is absurd. Now, I do talk to our brokers and people who are much more clever than I am with regard to capital markets. And they tell me that this is a very common problem with a lot of mining companies, but also other companies. You can see there's been huge sell-offs across all sorts of areas, both outside of mining and within mining. Now, Shanta's been resilient this year. Our share price has done much better than all of the indices put together. We still believe there's a tremendous amount of value. I mean, tremendous amount. When you're generating this much cash flow and you have this much experience, in country, this is very, very attractive. And I would say there's all sorts of upside in the share price. So it's a very interesting time to be considering Shanta as an investment. And it's not going unnoticed. James C. over the last year has asked, the targeted Singida production start date has slipped from late 22 to early 23 to March 23. Please, can you elaborate on what's causing the delay? So parts, equipment, lead time, difficulties. Okay, so late 22 to March 23 is about 90 days. That, in my view, is not a material change in the estimated start date. What you don't want to do with these projects is get ahead of yourselves in terms of funding capital that you can't afford. And what we prudently did was raise financing. So we raised this capital from Standard Bank, which gives us a lot of financial flexibility, incredible amount of financial flexibility between cash on the balance sheet, forecasted gold production to fund the capital. Why did we do that? Well, we wanted to know the crown pillar was going to be successful. And we didn't know that until May. And so that was part of our plan. It was very important to make sure we de-risked the production profile from the Luica before we went and over-invested in other areas. So that's step one. Step two, we wanted to make sure that our Singida licenses were renewed, which they were in January. And so that led to some prudence before we overspent at Singida. Step three was to make sure that we had the financial capacity behind our plan, so the liquidity that we wanted to have in place before we over-invested too quickly at like projects like Singida. So we've done that now. We've raised the capital from Standard Bank. We've put in place a 12-month grace period. So we're feeling very confident about the outlook in terms of production. We're confident about our own liquidity and financial plans. A lot of other mining companies with way too much debt cannot say the same thing, and trouble is looming for them, I'm sure. And we're confident in delivering the plan. And so when you talk about late 22 to early March 23, that is not a delay. That is prudent planning, and I'm very happy with how that's going. Now, of course, March 23 can be brought forward, given we have the capital, and and I would say that's well within our ability to do that as well. Paul said, good work, Eric. Thanks for the clear communication regarding inflation components, timescales, grades. Is there anything that keeps you awake at night? Listen, first and foremost, any gold producer has to keep their eye on production. That is what sets the base. We have 1,000 people on our payroll every month. Production is the most important and safety, obviously, the two most important things to keep our eye on. And we do keep our eye on that. We're constantly evaluating our production, what we're doing with the equipment, and troubleshooting. Now, in terms of inflation, there are when we look at our cost base, a lot of it's based on different components that we can control. Where we can't control so much is on the energy side, and that even an incredible, say, the oil went to $150-$200 a barrel. I think it would certainly be a huge headwind for us, but it would it doesn't keep me awake at night. I mean, the world would be in a very bad place, and you'd think gold would be a great investment at that point. Timescales, the team is doing an incredible job on site. As I said, production of volumes and physicals is the best it's ever been. I mean, and they're using equipment that's 5 to 7 years old. This is hard work from the guys on site. I'm in the maintenance areas. I can see what they're doing. I can see how dirty they get by the end of the day. This is hard work, and they do an incredible job to keep the equipment going. So we're thankful for that. Anyway, so from our side, we've de-risked the plan. The production's looking strong. The Crown Pillars really helped us along, and Singida's on the horizon, and the balance sheet's in great shape. So things are looking very good from Shanta's perspective. Michael B has asked, are you concerned a lowball offer could come in? I cannot control things like that. What I can control is the delivery of Shanta's assets and production, and the market ultimately determines Shanta's value. As I said already, we believe there's a tremendous amount of upside in Shanta, and I encourage everyone on this call and all of our other investors to buy more shares, to support the share price, because it is a great time to be investing in Shanta Gold. Alistair's asked, what rate did you obtain capital from Standard Bank? We did publish that in the RNS back in, I think it was in June. It was a margin of 5.5% above LIBOR. And it's a variable rate. So as the interbank rate goes up, the cost of financing will go up. If it goes down, likewise. What's important for us is that the money came from Tanzania, from the Standard Bank Tanzania balance sheet, and that means it's tax deductible from an interest expense perspective. So whatever we pay, we get a 30% tax shield against it in terms of interest. Peter D has asked, what do you think is the main risk to meeting the Singida go live date? Certainly not capital, because we have enough of that now. I would say the last big lead item for us is the elution plant that's coming from Australia. It's meant to be delivered in November. We do have some flexibility on that, but that's probably the biggest. And then, we've saved, I would say, the easiest for last, famous last words, but the mining equipment, that's blasting rock and moving it with big equipment, which is you'd like to think is pretty controllable, because if equipment doesn't work, you just bring in more trucks and equipment to keep going. And that you would think is mostly under control. And that is the disproportionate amount of remaining work to do at Singida. That's it. Alistair B has said thank you. And so on that point, I'll end the call half an hour in and hand back over to the operator.
Eric, that's great. And thank you very much indeed for being so generous with your time there and addressing all of those questions that came in from investors this morning. And of course, if there are any further questions submitted today, we'll make these available to you immediately after the presentation has ended for you to review. And ladies and gentlemen, we'll publish all those responses where it's appropriate to do so on the Investor Meet Company platform. Eric, perhaps for redirecting those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments to wrap up with, that would be great.
I just want to thank everyone for their support. Thank you for attending this presentation. Thank you for listening to the Shanta story. I'm really encouraged by it. It's my single biggest personal investment is in Shanta. I'm there side by side with everybody, and and I want to thank you for your support. So go well, continue to follow the story. It's an exciting one, and we'll continue to provide the updates and deliver as best we can.
Eric, that's great, and thank you very much indeed for your time today and updating investors. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of Shanta Gold Limited, we would like to thank you for attending today's presentation. That now concludes today's session, so good morning to you all.